welcome, Mr. Roongta. Thank you for talking to VC World and Realty Plus. You've been a veteran of this domain. You started your career with SSBC, worked for almost 5 years there, and then joined HDFC. And in the last, I would say 17 years, almost 17 years with HDFC, and the last almost 5.5 years as the managing director and CEO of the HDFC Capital Advisors Limited. You've seen many seasons of Indian real estate. First of all, I'd like you to make a comment on, in your view, how has the real estate investment scenario changed in the last 16, 17 months? So I would like you to start with that, Roongta.
Thanks, Anurag. I'll come to your question, but you talked one small thing. I started my career with HDFC only. So to that extent, started with HDFC.
And then joined HSBC.
And then came back, yeah. So, but that's
in your professional profile publicly, the start with HDFC is not mentioned. That's why. So apologies for that. What has changed about the real estate sector in the last 17 months? And then we'll come to the investment side. What has changed in your view, Mr. Roongta?
See, we basically look at the residential part of it. So if I maybe talk about residential and or in general in real estate, I think from a supply perspective, obviously a lot of things have changed. So the entire industry is having unprecedented crisis. The lockdowns and everything had their own series of things. But from a demand perspective, I have in my career not seen more exciting times as I have seen in residential real estate in the last 12 months. And it is extremely exciting in multiple formats. It's extremely exciting because on one hand, there is tremendous amount of interest, domestic investors, international investors, institutions, all kinds of people who are trying to look at real estate. Because what happens at a global level, generally, see, any crisis means that there is a natural tendency for everybody to move into real assets. Real assets is real estate and gold or any metal. And there's a tendency to move away from financial assets. And if you see, the direct consequence of pandemic has been that everybody has realized that I don't know of probably anybody in scores and scores of people we meet who does not want to upgrade their house. A person living in a very big house says, I want to live in a farm place. A person living in a farm place says, I want to live in a managed place. A 2-bedroom guy wants to shift to 3 wants to 4, or they just want to have a small office nearby. And there are multiple factors for it. Work from home is one factor. There are a lot of other factors related to perceived wealth because stock market has done so well in India. And most importantly, because the general size of units available has gone down. So there are multiple factors, but net 17 months, I think things have become much more exciting than they were 17 months back.
You're right. In the residential sector, in my view, 4 things are driving real demand. It's not an investor-led demand. It is end-user demand. First is the fact that homes have become offices, so you need additional rooms. So if you have 2 children and 2 working professionals who are parents, then you need 4 rooms at least, which may have been 3 or 2 bedrooms earlier, but you need now a separate office space for each of the working parents, and you need a separate school space, or if schooling is happening from home. So really you need that. Second is millennials for the first time have moved from a sharing economy where they were traveling by Ola, Uber, and working out of co-working spaces and working out of lounges to actually working out of home. So they spend actually a lot of time at their home. So, and they have savings. The third point is because in the last 17 months, people have saved money. Indians like to save money for the rainy day. So they want to channelize that money into a house, which is a real investment. And possibly, Vipul, you can comment. You talk about metals and gold. This is the first time that the stock market is moving. Property market is looking to bloom, and gold prices are up. Right? So, everything seems to be while there is COVID and there is concerns about the growth of economy and concerns about the third wave, everything seems to be booming. Look at the IPOs. So now coming specifically to residential real estate, and you wanted to make a comment, Vipul, on everything booming. I said the stock market is exuberant, the gold prices are high, and the real estate demand is very high, especially amongst end users. If you look at markets like Bangalore, markets like Bombay, actually the number of property transactions is growing steadily.
See, Anurag, I don't have a very exciting, while the market is exciting, I don't have a very exciting job as yours, because if the background is an indication, you have a much more colorful work. Our background is that we just like to keep it simple. I personally am a big advocate of just keeping it very simple. I think the boom is primarily because there is so much money here. So much money is being printed, so much money is there because of savings or whatever it is. If more money is chasing the same set of things, obviously prices will go up. Rational, irrational is a function of cycle, but that in a nutshell, market obviously never remains at mean. Either it's over exuberant or under exuberant. So that's fine. That's part of the cycle. But that, in my opinion, explains, and it's not in India. I think real estate is booming across the world. Any place which is politically decent and there is no major action happening on the ground, the real estate is booming. So India is no exception. And you add to that the young population and the growth and so on and so forth. A lot of these presentations and factors are known to everyone. It makes a very heady cocktail. So that's the reason.
Vipul, as an investor, as a very large investor, as a seasoned investor, who's put almost 20,000 crores in the Indian residential real estate market, worked with some of the best developers. In some cases, I would say that your investments have made sure that those developers became who they became. So give a sense, how has things changed? The more things remain the same, the more things change. What has changed?
Okay, so coming from a developer perspective, a lot of things have changed. Obviously, I think Arpit mentioned it earlier, that just the equity that a developer was putting into a project would be as low as 5 to 10%. Today, that equity is significantly more, 2 to 3 times in new projects. Earlier, the large part of financial closure was customer receivables, pre-sales, or whatever it is. That has pretty much gone out of the window. A big factor of that is what you, Anurag, just mentioned. The entire 2008 to 2000, maybe 2006 to 2010, 11, 12, barring the 8 to 9 period, if everybody that used to have any surplus income was punting on buying under construction apartments and real estate investments. 2015 to 2019-20, I don't know of too many people who have not got a stuck project if they have invested in residential, where they have punted on some residential project somewhere and it has not done well, or they've been paying interest and so on and so forth. There are scores and scores of cases like that. What it is indicating and what has changed is that the investor is pretty much out of the market. And that has resulted in more equity in the system, whether it's a developer or it is private equity funds or it is just doing things. That's one. Second, if you, it's funny, but if you drive from the airport of any big city 5 years back to, say, your office or wherever you're going half an hour away, whether it's Delhi, Bombay, Bangalore, Chennai, Hyderabad, 5 years back, the advertising hoarding will be giving you aspirational homes, $1 million homes, $500,000 home, depending on where you are, where you have very jazzy, it's basically sky is the limit kind of a aspirational home that is being sold. Today, if you go in the last 1.5 years, it is only value. They'll say 20 lakh rupee home, 60 lakh rupee home, 90 lakh rupee home, 2 bedroom for so and so. Why? And that is because you were earlier selling to investors. Today you are selling to the end user. And end user is value conscious. End user will ask relatively stupid questions like, when will I get my possession? He'll come and visit the property 3 times. He will ask what is the EMI and all those things. And the way the selling happens, the customer, everything has changed. And that has resulted in a complete change in mindset as to how people are looking at things and how business is done. So from a developer perspective, a lot of things have changed. We just talked about, we track something called unit price by annual income. Unit price, average unit price of a home by annual income is the lowest ever. It is not that much money chasing. It is not anything else, but just that the unit prices have gone down, and the incomes are what they are, or they have increased to that extent. And that is at an all-time low, which is creating this entire optimism around residential.
Just to ask, see, when you're investing new money, apart from investing in your existing investees, existing portfolio, because they may do new projects, you believe in them, you have an ongoing relationship. When you're looking at new investment opportunities, what are you looking at? And give us a sense of some of the new investments that you are making, if at all you're making.
So we are doing a lot of things. I think we are at probably the start of what would be a very, very decent size cycle on real estate, because a lot of stuck projects which were stuck are getting resolved. I don't know if it's still not public knowledge, but the first set of residential projects or projects have got through the NCLT ecosystem. The first 2 or 3 projects have just got released in the last 3 months, which is tremendous, because I think it's a great thing. Once, it has taken us 2 years of NCLT and courts and so on and so forth to get it done. But now that the first set of projects are out, more and more projects will get resolved. When we look at any investment, our focus is counterparty. Our focus is, I think Arpit mentioned, obviously governance. But more importantly, when one factor that we look at very, very keenly is whether this person has the passion to develop something which is very, very different and is listening to the market. See, it's a very, unfortunately, most of the developers have a land up approach. They say, I have access to a particular land parcel, or I have access to a particular area, and I'll get an approval in a certain format, and I'll make X amount of money from it. I need funding. That is not business. That is asset making. What we are focusing on as an organization in HDFC Capital and the group is to support developers who say, I want to do a series of such assets. I am looking at where the customer is going, and in that, keeping that factor in mind, we have invested in about 8 or 9 platforms, 9 platforms with marquee guys doing, can you make, say, a 30 lakh rupee home 30 minutes from the city center of a major city, top of the line. So it is something which everybody used to live in, probably a bulk of the middle class of India used to live in 10 years back. And then the sizes kept going up and the affordability went out of the window. That affordability is coming back, as I'm telling you, vis-a-vis the ratio of unit price by income. But it's a supply driven issue. It's completely a supply side problem as far as the industry is concerned. If we can plug the supply play, which is happening, then there is no demand problem. Now the issue comes is, can the developer make money? Because ultimately I'm a fund, ultimately the entire banking industry is saying what is the margin. The traditional logic is, if it's affordable housing or if it's mid-income housing, the margin is low. That low margin with high volume works beautifully. And that is something that we are looking at, that is the developer looking at making it a business, or is he looking at doing it as an asset? And that is what is actually the big driver, as far as I'm concerned, for looking any investment.
This is a real estate investment summit, so I'm digressing, but it is. What do you think of prop tech and real estate tech and startups that can work around the ecosystem of property, whether it's residential property, commercial property, retail, warehousing, and in some way be strategic value drivers for it? What's your view on it, and what are you doing to be able to nurture this ecosystem?
Anurag, I'll quote a friend of mine. It's not directly, but I quote a friend of mine. They said that out of the 28 industries uh, across the world, when they did a survey on what has been the impact of technology, then real estate was second from last, just above animal husbandry. And that I think kind of sums up what is the kind of potential as far as industry is concerned. I think prop tech per se is an overhyped term because it's pretty much like AI. So everything which is common sense is now dubbed as AI. Anything which is slightly tech is considered prop tech. I think the big thing in India is going to be, as a developer, is this particular technology or whatever service thing that is being done, is it adding value to me? Is it is it creating a difference to maybe make the same thing faster, cheaper, or whatever it is? And the very simple answer to that is yes. The problem is that the startup ecosystem still, it's a chicken and egg thing. The startup ecosystem is saying, I want the developers or banks or so and so forth to adopt these new innovations. The developer community and the banks are saying, listen, that's fine, but first prove yourself. The first question we run a program called Heart, which is on HDFC Affordable Technology Program. We have about 19 companies under that, and we add about 10 or 15 a year now. The single biggest problem today in a hyper bull market is actually not raising angel funding and pre-series A and series A. It is getting business. Because ultimately all these valuations are only assuming one thing, that the person will just scale up. How will the scale up happen? Scale up will happen by adoption from the industry. But the industry guy says, listen, first you prove yourself. First question that he's asked is, who are your other clients? Now, as a startup, if you're asking me who are my other clients, then he says, listen, I want to move in. And I think it's a confidence issue. The industry says, I want greater confidence so that I can put this in my ecosystem, because as a developer, I have enough problems. I have a RERA issue. I cannot afford that a particular thing is not done in a particular manner. And obviously the startup has that problem. And I think what it requires is confidence drivers. There are 2 or 3 organizations which I think are doing a very good job in terms of bridging that confidence gap. And that is what I think the role of a venture fund or industry bodies is, or say maybe organizations like yours, Anurag, to bridge that confidence gap, highlight what is the right set of things and take them to the right level. And that is going to define in the next 1 to 2 years how real estate is being done, because the top line is fixed. The only way I can increase my margin is by higher efficiency. Higher efficiency can come from scale, but it also has to come by process related efficiencies. And that is where prop tech will come in.
Questions for you. One is in terms of quantum of real estate investment. Over the next 12 to 18 months, what kind of money from institutional investors you see going into real estate, and in what pockets? And for simplification, I'd say, I know you're a residential player, primarily residential, commercial, retail, and warehousing. Warehousing also as a sector is seeing, because e-commerce is growing a huge demand. So give us a sense, if 100 rupees was invested in the last 3 years, or the next 12 to 18 months, what kind of money are we looking at? I mean, if you could give your example. And second question was, which is a larger question, is clearly there is value in all new age consumer tech startups, but the valuations seem to be high, and what is your view? There's no question that there is value in those startups. It is the quantum of that value, right? So first, in the next 12 to 18 months, what is the kind of money you're looking at investing in the Indian real estate sector, and what do you think overall will happen? And second is the valuation of startups in India. What is your view on that?
Okay, so I'll go for the first one first. X amount of money has been invested in the last 3 years. Okay, generally it is always taken as what is the money that is coming from private equity funds or what has been raised in the public markets. That number will be 3 times in the next 18 months. And the reason it will be 3 times of what it has happened. So it's, in a half the term, it will be 3 times. So we are talking about 6 times the amount of money that is coming that way. The reason for that is one, the pandemic again has changed the view of a lot of sellers. On the commercial space, you see maximum amount of money that is coming, whether it's commercial or it's warehousing. I think retail, the game has not yet started. It is beginning. While I said that we are doing residential, but we have very strong linkages with all these things. And in fact, we are just doing a very big platform on the logistics side. But the money is coming because there is today a willing seller who is ready to climb down on the price because he has seen the pain that last 18 months of pandemic has done. And that is why, because there is a willing seller who is willing to come down, there is enough capital. That is because the cost of capital globally has gone down. So anything that is income accruing will come up. I think there is a lot of scope. There is enough number of assets that are there. Today, only on the residential side, if we say, there is a lot of last mile thing, but that is at very high rates of interest. On the commercial side of things, most of the ready stock is pretty much owned. So now the entire thing is related to build to core. On the warehousing, there are about 11 platforms that I know of that are already there, trying to build more warehouses and so on and so forth. But the scope is definitely there. Commercial side, the new plays, obviously the data center thing. Yesterday also one big deal happened, and a lot of action is there because you just need so much tech, you need more servers, and you need more efficiently run ecosystems. So retail, I think, will bounce back. It can be in multiple formats, but it can be in more street formats and low-rise formats and so on and so forth. But because the prices and the general value has gone down, it will come back. I still feel I think you somewhere asked as to what we are looking at. We are about $1.5 billion today. We are looking at deploying an additional $2 billion over the next 2 to 3 years. Only in the residential space, we are looking at a whole series of things in the commercial space, in rental housing, logistics, but more on the rental housing and logistics space rather than pure play commercial. That's as far as what we are looking at. On your second question,
that's a big confidence in the Indian real estate sector, especially the residential sector. And I know you are very bullish, but you're at the same time very calibrated and I would say conservative. You want to go for good quality assets. You had a good run in terms of where you invested. So clearly, if it comes from you, that means a big thumbs up to the Indian real estate sector, especially the residential sector.
Thanks. Coming to your second question, Anurag, related to valuation of the consumer tech. While I'm no expert in terms of commenting on whether it is overvalued or not, I'm a little bit of a old market guy, but I can assure you that we haven't seen the last of these valuations, or there is so much stuff. If I bring this consumer tech again in the context of real estate, if I own a real estate customer, if I am selling as a developer, I am selling a home to a person. It is actually the mother of all sales, and it is the mother of all buys that the person is making. It's the highest investment that generally that person is making in their lives. The kind of consumer-centric businesses that can be created out of simply the sale that I'm making, the industry is not using at all. And today I am selling the home and I'm just looking at the margin that I'm making on the home. Actually, I've sold home loans for 7 years in my life. and I'm still in touch with at least 50 people 15 years, 17 years later, whom I had sold home loans. Because they remember that, listen, when we bought the home, you helped us get a loan. Whereas, I was probably just a front office guy processing a loan application. And I can relate to that sentiment because home is still a fairly emotional buy. And that is something that is not being leveraged on the consumer tech side. While I know I'm not talking about the valuation part, but just imagine if the largest or the big developer today is talking about the fact that, listen, I'm selling X number of homes, but more importantly, I am plugging in thing for selling services to all my buyers. The value that the same developer can make on that is significantly different and more than what he's making by making the margin on selling that flat. And that possibility, in my opinion, is driving the valuation. The same logic applies to whether it's ordering food or it is doing micro financing things or anything of that matter. But I think like everything has its cycle. I hope it is not that much a cycle. But the moment I can, on an Excel sheet, justify the drag and compound it by 50% and do it over 10 years and then discount it at 15%. So if I'm compounding at 50 and discounting at 15, the net present value of everything is at least 5x of what we are talking. And that is what is, I think, driving the value. Right or wrong, coming from traditional thought process, more wrong than right. But I've been proved wrong a lot of times on this issue. So I will not say, but I think the potential to make money by doing this consumer tech, by cross-selling different things, is significantly more. It doesn't matter what the value is. What matters is what value I am making on my P&L. Value of my company doesn't matter. How much money am I making as my PBTs or PAT is concerned? That is more important, I think, in the long term.
I think because these are early days of consumer tech, I don't think investors are looking at it. They're looking at the future potential. They're looking at data. They're looking at consumer acquisition, and they're looking at there is a scarcity premium also, I would say. And clearly the markets are exuberant. So combined, you get what you get. I'd let you go by asking you, if you had to make one prediction about the real estate market in India, what would that be?
I think real estate has lost its so-called sheen in the last 5 years as an investment class from an individual perspective. And the one thing that is going to happen, and it is already happening, I think the tide is turning. It will become a major investment class because it is anyway the big portion of the net worth. It will become an attractive investment class in that 12 to 18 month period that you mentioned. And that, I think, will change a lot of things.
Thank you so much, Mr. Vipul Roongta. That was Mr. Vipul Roongta, Managing Director and CEO of VCWxRE Capital Limited, who's invested about $1.5 billion in the Indian real estate sector as an institution, and primarily in the Indian residential sector, saying that Indian real estate investments will become attractive for individual investors. That augurs well. He also talked about the fact that the price for end consumers is the lowest in a long time, and that will drive actual demand and continue to drive the uptake. These are significant trends, and I'm sure as we talk to him more and again, we'll be able to decode some of these trends. Thank you, Mr. Roongta, for talking to us. We look forward to more interactions with you. I'll hand it back to Sapna Srivastava, who's the editor of Realty Plus, and I'm sure we'll engage with you soon. All the best. Happy investing.
Thank you, Anurag. Thank you, everyone.